Good morning, traders. Matt Weller here, Global Head of Research with FOREX.com. Today is Friday, the 1st of May, 2026, and markets are mostly in consolidation mode as they digest a very big week behind us and look ahead to what could be a potentially volatile weekend in the Middle East. In today's video, I'll break down everything that you need to know ahead of today's US session. Let's get into it. So as I mentioned earlier, we're not seeing much in the way of market movements, with the FX market broadly flat and indices as well narrowly mixed. That taking place as oil pulls back just a tick. Seems like the market is very sanguine that some sort of progress could be made in the Middle East. Meanwhile, the headlines that I'm reading are suggesting that we could see some escalation, perhaps a return to military strikes, either by the US or Israel or Iran in the area. So watching the status of the ceasefire this weekend will be key, and certainly from a trading perspective, you'll want to manage your risk heading into the weekend. In earnings news, we did have Apple report earnings after the market closed. They were fairly mixed. Apple initially fell, now trading higher ahead of the US Open by about 3%. Nonetheless, the NASDAQ is pulling back slightly, and we're now through the majority of the Magnificent Seven earnings, with only Nvidia left to report later on this month. That, again, will shift more of the focus into the Middle East. And then in terms of traditional economic data, the major report I'll be watching today is the US Manufacturing PMI reading, which is expected to improve to 53.1. That is expected at 10 o'clock Eastern time, and the employment component of that report tends to be a very good leading indicator for non-farm payrolls, which will be a week from today on Friday. Today's chart of the day is an opportunity just to take a step back and look at how the dollar is evolving. My broad takeaway here when it comes to the US dollar is that it's heavy, that traders are looking for excuses to sell it, but as long as the situation in the Middle East remains unresolved, it's being at least somewhat supported by a safe haven bid. If we do see tangible signs of progress toward peace, that's where the selling in the dollar could really accelerate. Here, you can see on this chart that we're breaking below the 50% Fibonacci retracement on the US dollar index, opening the door for a move down to the next level of support, closer to around 97.50. And that perhaps looks likely regardless of what happens, unless we see a dramatic escalation in the Middle East. So with the dollar being weighed down, that tells you that you can look at some of the other crosses against the dollar for opportunities to pair strength with weakness. Certainly, I wouldn't be looking at the yen in this environment, at least yet. That is today's video. Thank you for carving some minutes out of your day to watch. If I can ask just one quick favor before you go, please do just drop a like on this video. It's a free way to show your support that really helps us with the algorithms. And if you're not already, please do subscribe to our YouTube channel at FOREX.com. Thanks again. Best of luck with your trading today, and have a great weekend.